Today, we are delving into the mindset of America's most profitable trader, Jesse Livermore. In today's video, you're going to get an insight into this titan's timeless principles that helped him generate $100 million in trading profits in 1929, which, by the way, is equivalent to $1.4 billion in today's money. Jesse Livermore is the perfect example of the polarity of success as a trader. He's an example of a trader who has reached the highest of heights a trader can reach, but is also an example of a trader who has reached the lowest of lows. And from both these highs and lows, you're going to draw a significant amount of lessons, practical lessons from this video that you can implement into your trading to help you become a better trader, to help you achieve consistent profitability, to help you lower your trading emotions, to help you get funded, to help you get payouts. Jesse Livermore had incredible technical knowledge as a trader. He knew how to trade, but he struggled with his psychology, he struggled with risk management, he struggled with sticking to his trading plan. And just like a lot of traders face, he had a lot of issues in his personal life and with his psychology that seeped into his trading and impacted his trading results. He also fell into many traps that a lot of traders nowadays fall into as well. So there are many lessons we're going to draw from the life and the experiences of Jesse Livermore. Now, this is not just another generic life story of Jesse Livermore. There are plenty of other great YouTube videos on that. Rather, what I wanted to do in today's video is dive deep into the psychology of Jesse Livermore and share with you something that you haven't seen on YouTube before, you haven't read in any of the books. And I'm going to give you a psychological perspective and an analysis really on Jesse Livermore and his psychology. And we're going to make it very practical. So you're going to be walking away from today's video from learning from Jesse Livermore's lessons with practical tools that you can implement right now into your trading to be getting better results. So without further ado, let's get into it. Now, very early on in Jesse Livermore's life, it was obvious that he had a great affinity for numbers, and he was very good at maths and arithmetic and understood numbers. And he knew this from an early age. He had a fascination with numbers. However, his dad was a farmer, and his dad wanted Jesse to follow in his footsteps and become a farmer as well. And Jesse Livermore wasn't very happy about this, and he wanted to pave his own path. He wanted to go off and find his own success. Now, this may seem like a little bit of an odd thing to put into a trading psychology video, but believe it or not, and whether traders want to admit it or not, the social influence and the family influence and, trading is a non-conformist activity for the most part. It's not a typical job. So when traders tend to put this idea to their family that they're a trader or they're going down that career path, they're usually met with resistance. And most individuals bend to the will of society. Most individuals bend to the will of their family, and they give up what they would truly love to do to please their parents or to please their father or their mother or to please society, either subconsciously or consciously. And a lot of traders don't have the guts or the will, as Jesse Livermore did, to say, you know what, this is what I'd love to do. I'm going to pursue that path. So his father wanted him to be a farmer. And Jesse, from an early age, had a curiosity for numbers. He had a skill with numbers. And he didn't let anybody deter him from his mission. And like I said, this may seem like a small thing, but as a trader, if you go down that path, you have to know what you would love to do. And you have to have such certainty in your own mission and what it is you would love to do and your role that even if people that you admire greatly, like your parents or individuals in society, and if they say to you that this isn't the right path for you, you know what's best for you, and you pursue that irrespective of what other people are saying. And this is a great lesson from Jesse Livermore. He knew what he wanted, he knew what his mission was, and he went off and pursued that. And really, what other people thought didn't matter to him. And that's the type of ruthless mentality and level of certainty you need to have in yourself if you want to succeed as a trader or succeed in anything you want to do, really. So he went off and pursued his love for numbers, and he ended up getting a job very early on, age 14, at a brokerage house. And at this brokerage house, he worked by writing numbers on a whiteboard. He wasn't trading at this point in time. But what he did have is the ability to observe people in that environment. He was put in that environment, and he had the opportunity to observe what was going on around him in the brokerage house. And that's really what he did, and where he started to formulate his first ideas for his trading edge. And this is where his development of his edge came in. Now, what was interesting when I was doing research on Jesse Livermore and in his book, The Reminiscence of a Stock Operator, you can see that he has his processes for developing an edge. And a lot of the great videos on YouTube cover this, where he had this process really of observing, of documenting, of organizing and finding the patterns in the information that he documented, and then going off and testing his ideas. Now, this is very much a transferable skill to any trader nowadays. That's really what you have to do. You have to put yourself in an environment, whether that's a trading education group or watching many different individuals on YouTube or just going into the charts and testing many different ideas. And you want to observe a lot of things. You want to document a lot of things, and you want to organize this information. You want to test this information. And I'm going to break this down on the iPad very soon because I think it's a very important concept. And this is what he did in his first job at a brokerage house. Now, a year later, he went off and he started to really formulate his trading idea, and he put it into a system. And this is where he first started trading at something called bucket shops, which was a way where you could almost gamble or bet on the direction of the market without actually trading directly into the market. And this is where Jesse Livermore started because of lack of resources. And at age 15, he made $1,000, which is equivalent to $25,000 nowadays. And this again came down to his ability to observe, document, organize, find patterns, and then go off and test his ideas very quickly at bucket shops. And this is very much a timeless principle that many traders can implement. I want to break this down a little bit more on the iPad so that any trader watching now can implement this timeless principle. And if you want to develop an edge, what you really want to be going off and doing is following this process. And the way I like to teach the development of an edge is like this, is in terms of a funnel. And really at the top of a funnel, you have a very big opening, and then that funnel drips down, and then you have a very small thing at the bottom that lets out the whatever. But this funnel, the top of the funnel is where you put all these ideas. And as a trader, the first step you want to be doing, just as Jesse Livermore did, is you want to be observing. And you want to be in many different trading communities, studying many different trading mentors and educators, looking at many different charts and markets, and just observing what the market's doing. And this is all the information you put in at the top of the funnel. And you document this information. And then what you're trying to do when you go further down into the funnel is you're trying to find patterns. You're trying to find patterns that repeat themselves, and you're trying to find ideas that repeat themselves in the market through self-fulfilling prophecies. And then what you go off is what you're starting to do is you're taking a lot of the information and you're starting to organize it, and you're starting to dilute that information just to the high priority information. And you start to organize it into a trading plan, into a trading system, and then you go off and test this system. Now, nowadays we have TradingView and the replay tool in TradingView. I don't think Jesse Livermore had that luxury back then. He had a different way to test his ideas at these bucket shops, but nowadays we have many different resources to test our ideas. The replay tool in TradingView. We also have access to prop firms, which are very low cost options to funding, so you can test your ideas on larger and larger amounts of capital. And to develop an edge, you want to go through this process of observe the patterns, organize into a trading plan, and then test these ideas. And then doing this over time and being observant of the patterns that repeat themselves, out pops out your trading plan and your trading system that you have certainty in. Now, many traders just try and skip to this step, and they go and pay for an educator to just teach them, tell me what to do, really is what they say. And they try and jump straight to this step here. This is Z. But really the best traders go through A. And one thing I've observed with many traders, especially the ones that do very, very well, they go through the whole process A through to Z. And the reason they do it is because they love it. Whereas the traders who just skip to Z are just coming into the markets because they want to make a quick buck here and there, and they hate their job and they just want to make a little bit more money. And from my observation, working with many, many traders, what I see is the traders who go through the whole process A to Z are the ones who oftentimes stick it out, mainly because they just love it so much, and they're doing it because they love the process of becoming a great trader, just like Jesse Livermore did. Now, an additional component on top of this is you want to then test. When you're doing your back testing, your testing, you want to be very intentional about your testing. And what you're testing for really are three components. Number one is your entry point. How do you get into the market, right? What factors do you look for on the higher time frame that give you an indication of a good area of value? And then once you have that area of value, what indications do you look for on the lower time frame to give you your entry criteria to then put risk on in the market? And when you're testing, you also want to be looking for your exit points. What specific components do you look for in the markets to give you an indication that the run's over, you need to get out the market? And then thirdly, you want to be testing for your risk management. What risk management protocols do you put in place? How much do you risk? And how do you trail your stops? Do you take profits, etc., etc.? These are all things you want to be intentionally testing for when you're developing an edge. Now, I have my trading plan template that I give to my six-figure traders. It's completely free. It's probably the first link in the description below. So if you don't already have a trading plan you're certain in and that is building consistent profitability for you, make sure you go in there and download that trading plan and you follow this process of observe, find the patterns, organize, test. And when you're testing and when you're organizing, you want to organize into the trading plan template that already outlines all these three components and all the minute details in between. That's all covered in the trading plan template already for you. So that's link in description. Check that out. Now, the next component of Jesse Livermore is that he was notorious for going on these wild swings, the boom and bust cycle. And many traders watching this are probably in a very similar situation where they do very well for a short period of time, followed by periods of giving all that money back. And some traders do it incredibly well, just as Jesse Livermore did, and they give it all back. And they go through this pattern of boom and bust. Some traders even label it self-sabotage, okay? But from my observation, working with many traders, breaking down what self-sabotage actually is, it's not really self-sabotage. There are very specific things that traders do. There are patterns, unconscious motives that they're following and they're falling into, that once you address those, you get out the boom and bust cycle. There's no longer self-sabotage. So I want to break down Jesse Livermore's boom and bust cycles because I guarantee you they're going to give you some insights into your own trading. Now, Livermore had issues holding on to the money he made, and he made a lot of money. And one of the components to this was that he didn't stick to his trading plan. Another one of the components was that he had an exuberant lifestyle. And the third component of this, and this one's sort of speculation, but we've seen it documented enough in the book and on the documentaries of Jesse Livermore. He had quite a volatile and turbulent personal life and marriage, multiple marriages really. And all of these components came together to have an impact on his trading and to influence his trading negatively and keep him in the boom and bust cycle. Okay, so let's break down the boom and bust cycle on the iPad. And we're going to dissect each of these three specific things, and I'm going to show you how to overcome them. Now, Jesse Livermore, when he was working in that brokerage house and he first created or started to observe his strategy and then created his first strategy and then went tested out at the bucket shops, he went off very early in his life between age 14 and 15 and he made $1,000. Okay, that's very good. That's the equivalent of $25,000 in today's money for a 15-year-old. That's quite good. And then he continued doing this and he made even more money. He went off and he made $10,000. Okay, and then there was a period in his trading where he struggled to stick to his rules. He would deviate from his rules and he would take trades that weren't part of his trading plan. And because of this, he took that $10,000 and it went down to $2,500. Okay, so he had his first cycle of boom and bust. And this was because of an inability to stick to his trading plan. All right, so he had a period of doing very well because he tested his trading plan and put it together, and many traders do that. They find a profitable edge in the markets that actually performs very well. This resonates with me early on in my journey where I had a strategy that I traded very well and it worked, and then I took on my first round of six-figure investment with it, and because I had no control over my psychology on larger amounts of money, I then struggled to actually stick to that, and I revenge traded. I gave all the profits back. So Jesse Livermore did very well, and then he struggled to stick to his trading plan. And then he deviated from one of his rules, which is don't listen to anybody else and just trade for yourself. And he ended up buying into the cotton market based on a tip from someone else, which we're going to talk about a little bit later on in one of his rules. And that ended up putting him into $1 million worth of debt, believe it or not. And he went on this wild swing of boom and bust. And by the way, this is over a larger period of time. He wasn't 15 years old at this point. It was a little bit later in his life. But I'm trying to, demonstrate that Jesse Livermore was very much a boom and bust trader because of multiple factors. We're going to be breaking down a lot of these factors. Okay? And, after this, because he was so far in debt, and what he did was, what happens, I talk a lot about this on the YouTube channel. What happens when you're in a state of shame or in a state of self, depreciation is you tend to go back to priority. And there was one documented report on Jesse Livermore where he said that he found his way back on his feet trading for someone else after he was $1 million in debt. And then he waited 6 months for the perfect opportunity. So when he was up here in this state of pride after making all this money and his ego got to him, he didn't stick to his trading plan, because when you're in a state of pride, you minimize risk in the market and you take lower quality setups and you deviate from your trading plan. Whereas when you're in a state of shame, beating yourself up, almost in this state of fear, what happens is you go back to priority and you stick to your trading plan. And you're exaggerating risk in the market, so you're very, very careful. And what actually happened was Jesse Livermore ended up shorting one of the biggest stock market crashes, and he ended up making $100 million. Okay, and obviously this is not to scale, but he ended up making $100 million off shorting a stock market crash. At that time, in 1929, he made $100 million. And by the way, that $100 million is equivalent of approximately $1.4 billion in today's profit. So imagine making $1.4 billion trading profits today. It's quite a remarkable feat, okay? So he went on this boom and then bust cycle and then another boom cycle. And because of his lifestyle, because of, and again, speculation, but personal life, there's plenty of reports of having a lot of turbulence in his personal life with marriages. And I know I work with a lot of clients one-on-one who go through, divorces and, bankruptcies and all that type of stuff, and work on the emotional charges to that. And this is obviously a very emotionally draining situation in your life. And it's very difficult to trade well when you're going through something like that. And because of this, because of the lifestyle, the exuberant lifestyle, spending a lot of money in his personal life, the turbulence in the personal life, and again, not being able to stick to his trading plan, he ended up losing all this money. And he actually filed for bankruptcy. And it's also reported that when he was 65 years old, so this is a very, summarized version of Jesse Livermore's trading profits throughout his life. But at age 65 years old, unfortunately, he committed suicide and he shot himself. Okay, and he just couldn't deal with the volatilities in his life, in his trading, and at that point, he had lost the drive and the passion and the love and the vigor for his life and for trading, which we're going to touch on a little bit later on. Okay, so this is an example of Jesse Livermore's boom and bust cycle. Now, there are three components I want to break down. Firstly, his deviation from his trading plan here. His also the lifestyle, the exuberant lifestyle, and the personal challenges here. There's the two components I want to touch on. So firstly, once you have your trading plan and your edge, like we talked about in the previous slide, once you have your edge, you now need to stick to your edge. And the way you stick to your edge is by managing your psychology. And there are many components to managing your psychology. Firstly, managing fear and greed are two major components, because it's both fear and greed that are going to take you away from your trading plan. And then on top of that, Jesse Livermore was also influenced by other traders. He took the opinions of other traders. So also managing and having confidence in your own abilities and your own strategy, that's going to get you where you want to get to, helps you stick to your trading plan. Now, one of the biggest things that promotes fear and greed in trading is, especially, is this idea when you are looking at the market and you're creating ideas in your mind about what you think is going to happen, and you create what I call outcome-based ideas, or you're called an outcome-based thinking, or you're projecting onto the market what you think the market's going to give you. I think the price is going to go here and it's going to make me $10,000. Price is going to go here, it's going to get me a funded account. And this is what you're doing in your mind, is you're promoting greed. And the moment you promote greed in your mind, having that $10,000, having that funded account, guess what? You simultaneously promote fear. And the reason you simultaneously promote fear is now you all of a sudden fear losing and missing out on the 10K. You fear losing and missing out on the funded account because you create a greed and a fantasy over these things. So now you fear missing out on them and fear losing them. So whenever you create ideas in your mind and you project these onto the market, you now introduce fear and greed into the markets, and you take yourself away from your trading plan because you're too scared to execute, or you're greedy and you're minimizing risk in the market and you want to rush things and you want to force ideas onto the market. So with both fear and greed, you don't stick to your trading plan. And Jesse Livermore actually has a quote, which we're going to talk about at the end of this video, where he covers this and he talks about wishful thinking. Okay, so the way you get rid of wishful thinking is by implementing what I call the Bulletproof Your Mindset tool. This is a free tool in the link in the description. And this tool has been what I've been giving to my six-figure traders for years to help them manage fear and greed, to help them stick to their trading plan. And this is, again, a link in the description to download. And what this tool is effectively going to help you do is it's going to help you, number one, identify your outcome-based ideas, your greeds, your fantasies before you take a trade. Then it's going to help you ground them. Then it's going to help you adhere to your trading plan, and it's going to help align you to your trading plan. So it's going to, ground the greed, which means you ground the fear before you take the trade. You're going to remove that from your mind. It's going to help you align with your trading plan. So you're going to be taking trades that are in alignment with your trading plan without the emotion attached around that. And that Bulletproof Your Mindset tool is a very important process. The tool is important, but the process that the tool helps you go through is even more important. So if you don't already have that tool, you haven't been using it, make sure you download it and use it before every single trade you take. That's going to help you now stick to your trading plan, the trading plan that you've just developed. And it's very possible that Jesse Livermore created greeds and ideas of what he thought the market was going to give to him. That's why he didn't stick to his trading plan. And the reason I say that's the case is because he, in one of his quotes, which we're going to talk about later on, he talks about the impact of wishful thinking on your trading. And we're going to cover that a little bit later. Now, the other thing that Jesse Livermore took him away from his trading plan was lack of confidence, really, in his trading plan, and him putting some other traders up on a pedestal, thinking that they knew better than him and they should follow his advice. And what ended up happening is one of the traders was telling him that he should buy cotton, one of these very famous cotton traders, and that trader that was telling him to buy cotton was actually shorting cotton. And Jesse Livermore took a big loss on that. So it's very important, once you have your trading plan, your edge, and your mindset tools, that you have certainty in those and you test to have certainty in those, so that you're not looking left and right. You're not deviating by what other people think and what other people say. Because once you have your trading plan, once you have your mindset tools in place, it doesn't matter what other people say. It doesn't matter what other people do. What's most important is now consistently sticking to your trading plan. That's what's going to get you your goals, and that's what's going to help you achieve consistent profitability. Okay, so the way you stick to your trading plan is by avoiding wishful thinking and by having complete certainty in your trading plan, so you're not deviated from your trading plan by other people. And it's very easy to be moved and pushed by social media, and you think that someone else is better than you or smarter than you, and they have ideas that you don't, or they're more successful than you because you look at the one-sided facade they put out on social media. But the truth is, all you need is to prove you have an edge, put that into a mechanical trading plan, and then once you've done that, you have everything you need. And you don't need to look at all these individuals on social media who half the time are faking it and putting a fake facade, one-sided facade out, which isn't even true half the time. So develop a trading plan, remove wishful thinking with the Bulletproof Your Mindset tool, and then avoid comparison. Just stay in your own lane. Stick to yourself and your own rules. That's what's most important. Now, another component of Jesse Livermore's boom and bust cycle was his going into debt because of his lifestyle. Now, what traders need to understand is that we all spend money according to what we value. So the moment money comes in from your trading profits into your bank account, if we have at the top of that list of values, partying and yachts and watches and cars at the top of that value list because we value, showing off and impressing people and putting that on social media, that the moment money comes in, we're going to spend money according to what we value. And you know what you value because your life demonstrates it. So we're going to go off and spend that money on yachts and cars and watches and all that type of stuff. And we're going to make profit in the market, and that's going to be spent on this depreciable luxury. Okay? Now, Jesse Livermore had a high value on, keeping up with the high society and spending money and partying and that type of stuff. So the moment money came in, it got spent according to that value system, keeping up with the high lifestyle, the houses and the cars and whatever he was spending money on. Okay? So if you don't want to fall into this trap and you want to get out of this boom and bust cycle trap, you need to value the action steps that make you keep money, or at least a percentage of it. So let's say you have $100,000 come in from trading profits for the year. If you have a high value on partying, then that money is going to come in, all of it's going to be spent according to your partying value. It's going to be all spent on partying. But if you value saving a portion of that income and then investing a portion of that income into income producing assets, then guess what happens? $100,000 comes in, and then depending on how much you value it, let's say you value 50%, 50% gets saved and invested, and then the other 50% gets blown. So at the end of the year, you still have $50,000 to show for because you raised the value of a certain action step that helped you keep money. So every single trader, I've been talking about this on my channel for a very long time, and as a way to avoid lifestyle creep and giving back your profits by splurging, and to avoid the boom and bust cycle, a percentage of all your trading profits that come in, a portion of them need to be saved, at least 10%. And then once you've built a cash cushion of 6 months, anything that goes over that 6-month cash cushion needs to be invested into income producing assets. And ideally, this number here is as high as possible. If you get it to 50 to 60 to 80%, that's amazing. And that way 20% is spent on lifestyle and expenses, and then 80% of your money is saved and invested. And that way, as long as you're trading, you're working for your money. But if you've got your money in savings and then a portion of that savings goes into income producing assets to an index fund, that index fund is generating you income passively through dividend yields, and you're not working for that. So you're generating a passive income through a dividend yield, and that's money you're not working for. That money's working for you. So every trader needs to have a system where they value saving and investing money into income producing assets, so that if they make money from their trading, it doesn't all get blown, doesn't all get spent, but at the end of the year, they have something to show for it. Okay, because Jesse Livermore did not do this. All right, and then number 3, the third reason Jesse Livermore went on a boom and bust cycle was because of his personal life. And I've talked about this a lot, but you have 7 areas to your life. You've got your trading, which falls into as a part of business, income producing. You've got your finances, which is your investments and money management. You've got your relationships and family. You've got your health and fitness. You've got your mental faculties. You've got your social leadership. And you've got your spirituality, your spiritual mission. Right? It doesn't have to be anything religious, just a spiritual mission. 1, 2, 3, 4, 5, 6, 7. All these areas of life are what every individual is going to be exposed to throughout their life. And if you have issues in your relationships and your family, that's going to impact your trading performance. It's going to impact your ability to make money. That's going to, most likely take half your finances away from you. That's going to definitely drain you emotionally. That's going to drain you mentally. That's going to impact your ability to lead other people. It's going to kill your ability to be inspired by what you do. So any of the areas that you don't empower are ultimately going to affect your trading and your performance day to day. So as a trader, you need to focus on setting goals and empowering all 7 areas of life, your trading and business. You need to set goals, and you need to have goals for your finances and your money management. You need to have goals and processes for your relationships and for your family. You need to put energy into that area. Your health and fitness, the same. Otherwise, you're going to get fat and sick and sluggish, and that's going to impact your ability to perform. Your mental faculties, if you're not sharp and you're vulnerable mentally, people are going to take advantage of you. 6, social leadership. If you don't set a leadership course for yourself and you don't lead other people, chances are you're going to fall under someone else's leadership. 7, spiritual mission. If you don't have a mission for yourself, chances are you're just going to go through the system. So you need to set goals for each of the 7 areas of life. You need to empower each of the 7 areas of life through high priority actions every day. And you need to recognize that any of the 7 areas that you don't empower, especially your relationships, you're going to have issues in your finances and your trading. This is what Jesse Livermore, he was vulnerable to this. He made a lot of money, and then he had a lot of issues with his personal life and his relationships and his divorces, and paid the price, paid the consequences. Okay? Hopefully that makes sense. Now, the next lesson here from Jesse Livermore's life is the ultimate lesson, really. It's very unfortunate. Jesse lost his fortune and he lost his life. He committed suicide, took his own life. And his personal life in turmoil, he filed for bankruptcy after coming from such a high as well. He lost his love for trading. He lost his vigor for trading, his motivation for it. He had no reason to build it all back. And he lost his love and vigor for life. And he was found dead at 63. He committed suicide. He shot himself. Okay? So obviously this is not a situation that any trader wants to go through, no individual wants to go through. And unfortunately also, not enough education or understanding about suicide is put out there. Many people don't actually know what's going on, and many individuals are vulnerable to their own psychologies because they don't know how to manage it. And part of this YouTube channel, I've got 2 videos out now on suicide, depression, and guilt and shame. They tie into that. So I talk about suicide in depth in those 2 videos. So if this is a hot topic for you, this is something that you want to learn more on, or it's of urgent priority, make sure you go check those videos out. But I'm going to give a little bit of an overview here. Now, one component when we talk about the boom and bust cycle also is that Jesse Livermore came from such a high. And depression and suicide, we have this fantasy in our mind. And Jesse Livermore he had made $100 million. And then when he started to lose it, and again, this is, to a degree, a lot of speculation that I'm putting out by what I'm saying. But I could imagine that when you start to lose it, he was thinking about how good this was and how positive this was and the fantasy of making the $100 million. So when you lose it and you don't have it anymore, your life is very depressing in comparison. So the depression doesn't exist without the fantasy. At the moment you're depressed, in your mind, you're comparing your life to a fantasy, a very positive reality in your mind. So you can't separate the positive and the negative. And what happens is the individuals with depression, in that exact moment, they're comparing their life to how they wished it was. So like I've explained in many of my other suicide and depression videos, you have to identify what the fantasy is at the moment you're depressed, and you have to make yourself aware of the drawbacks and the risks and the disservices of that, and the stresses and the pains. And you need to learn to take that fantasy off the pedestal. Now, I know a lot of people say, well, $100 million, what are the drawbacks of that? Well, there are drawbacks to everything. And nothing comes without a cost. And the $100 million certainly comes with a cost. You probably ask any very successful person now. And in fact, there are a lot of videos on social media where that guy's walking around interviewing people who've made a lot of money in their life. And they're very frank about the realities of making a lot of money, that it comes with risks, it comes with drawbacks, it comes with sacrifices, it comes with consequences. And there are, you now all of a sudden have the problems of $100 millionaire, $100 millionaire, whatever the label is. But someone who has $100 million, you now have the problems that someone who has $100 million has. Okay, and there are problems and challenges at every stage, at every level. So whenever you're depressed, you're comparing your current state to a fantasy of how you wished it was. It's important to identify that fantasy and find the drawbacks and the risks. Okay. And part of the suicide, part of the depression for Jesse Livermore, again, I'm speculating, I don't know, I haven't asked him, is the comparison to how his life was before. Okay, now, another component to suicide is, this is the positive, this is the negative, this is the future, This is the past. We can accumulate a lot of guilt and shame, and we can have this feeling of unworthiness, feeling unworthy. There's no vigor for life. There's no enthusiasm. There's no goals. There's nothing you're working towards. There's no reason why I feel unworthy. I've got an accumulation of guilt and shame in my life. And there is an altruistic compensation for guilt and shame. This feeling of I want to give. And I've talked about guilt and shame on this channel before, where if you have an accumulation of feeling like you've let yourself or other people down throughout your life, you can feel unworthy of holding on to money and having money. And the extreme case of guilt and shame, if that's taken to an extreme, the extreme case of altruism is the sacrifice of self. It's the suicide. So if you're feeling suicidal, having suicidal thoughts, you want to identify the guilts and shames, the feelings of unworthiness, where you think you've let yourself or other people down. And you want to go in there and you want to start to broaden your perspective to those situations and ask yourself, how have this certain action that I feel like I've let this individual down or have hurt this individual, how has that actually been a benefit to that individual? How has that served that individual? To broaden your perspective in that situation. You're not trying to make something up or trying to justify your actions in that moment. But what happens when we're emotional, we become blinded to the other side. We have what is called confirmation bias that only lets in information that supports our judgment and blocks out information that runs counter to that. So at the moment you're feeling guilty of letting someone else down, there is also an unconscious other side to that, a benefit, which if you hold yourself accountable to, you can make yourself aware of. It's there, but you've been blinded to it. And we get trained in society to think that, if we're mean to someone or if we are violent to someone, that's a bad thing and there are no benefits from that. But the truth is, being mean or holding people accountable or being challenging to people is actually sometimes what they need to become independent and what they need to, find their own path and to get back to what's a priority for them. So sometimes the beliefs we get from society may run counter to the vastness and the broadness of human nature and how we react in certain situations. So we have to be very good at broadening our perspective. Okay? But suicide is an extreme case of altruism. Altruism comes from the accumulation of feeling unworthy, the guilt and shame. So identify those guilts and shames and find the benefits to those individuals you feel like you've hurt or let down. Now, on top of that, like I mentioned, there's the fantasy component. If you're, at the moment you're depressed and really down in the dumps, what are you comparing your life to? What's the fantasy you wished you had at that moment in time? And then identify that fantasy and then find, all right, if I had that, what would be the drawbacks to that? And this depressed state I'm going through, what are the benefits of that? And these questions can help equilibrate your mind, broaden your perspective, broaden your awareness, and give you a broader perspective on your situation, which narrows the emotion and it minimizes the emotion in that moment. Okay? Now, if you have any questions on this or you need additional help, let me know. This is something I cover extensively in the 12-week program. I teach my students the processes to be able to identify any emotion in their mind and be able to understand why that's there, where that's coming from, and how to address it. Now, your mind isn't random. You're not just randomly having suicidal thoughts. You're not just randomly depressed. But these things come from very specific reasons, and they're there for very particular reasons. And if you understand that, you can go a long way in actually addressing the emotional charge and the emotion in that moment. Okay, now there are 6 lessons or 6 quotes from Jesse Livermore that I would love to wrap up this video by covering, because they are very, very insightful. And every trader nowadays is going to get a lot of value from them. So this is Inside the Mind of Jesse Livermore. The markets are never wrong, opinions often are. Remember how I talked about projecting ideas onto the market and wishful thinking? Jesse Livermore understood this idea that the market's never wrong, it's only our ideas and fantasies we create in our mind, the unrealistic expectations we create in our mind and we project onto the market that are wrong. Money is made by sitting, not trading. It's so important to have a trading plan that outlines your rules and outlines only when you should be in the market and outlines when you should be out the market. And it's important to stick to that and sitting on your hands and only executing when the market presents the opportunity that aligns with your trading plan. Money cannot be consistently made by trading every day, every week throughout the year. It's important to have an edge and only execute when the market presents the opportunity. The market doesn't work day to day, week to week. It doesn't provide a salary. It just moves, and when it aligns with your criteria, it's time to execute. Nothing new ever occurs in the business of speculating or investing. And you can go through previous market data, find patterns, find an edge, and you can go off and you can trade this edge into the future and make money off that. That's really what trading is. Few people ever make money on tips. Beware of insider information. If there was easy money laying around, no one would be forcing it into your pocket. If someone truly had a great idea and they were forcing that into your pocket, you ask the question, why are you doing that? Why don't you just go off and make a lot of money yourself with that? So be aware of people, putting people up on pedestals and idolizing people and thinking they have answers you don't. That's not the way to trade. You don't want to trade based off tips and signals and all that type of stuff. The way you trade is by identifying an edge, putting that into a mechanical trading plan, mastering your psychology, sticking to your trading plan, scaling with prop firms, and making money that way over a long period of time. The human, in my interpretation, it's actually the animal side of every person, is the greatest enemy of the average investor or speculator. Wishful thinking must be banished. Use the Bulletproof Your Mindset tool to banish the wishful thinking, get present with the market, quiet down your amygdala, your animal, your inner animal, put in charge of the prefrontal cortex, which is your human, and stick to your trading plan. That's the way to make money consistently. Now, hopefully this insight into the mindset of Jesse Livermore was insightful and you learned one or two things. If you did, please like and comment, subscribe to this YouTube channel, and share this video with your trading communities and those individuals that you think will get a lot of value from it. I appreciate each and every single one of you watching to the end, and check out some of my other YouTube videos. There's a lot of value on this channel. And one last thing, I do have the trading psychology archetype quiz. This quiz is going to share with you which of the 4 trading mindsets you have, as well as give you a free personalized report outlining how you can go from where you are to consistently profitable. So if you're interested in that, that's another link in the description below. Check it out, and I look forward to seeing you all in the next video.